welcome back to the deep dive.
Thanks for having me.
Today we're
Right.
going to deep dive into Hil Ltd,
Great.
which is an Indian building materials company.
Sounds good.
And we've got their official company filings,
Right.
but we've also got some independent financial analysis
Okay.
from Screener.
Interesting.
So it's kind of like we're financial detectives trying to piece together what's their story.
Exactly.
Are they thriving or are they?
Yeah, are they in trouble?
Yeah.
Yeah.
So let's
find out.
find out.
Yeah.
So first clue,
Okay.
pretty big one.
Why?
Their revenue
Dropped.
big time
Oh,
in the quarter
Yeah.
that ended September 30th.
September 30th. All right.
So we're talking a dip from old Diddle euro 107 crore,
Okay.
the previous quarter,
All right.
all the way down to 774 crore.
Yeah.
Big red flag.
Yeah. For any business. Yeah, I'd say so.
But I'm also seeing here
Uh-huh.
that their operating profit margin
Okay.
actually improved
Oh, really?
a little bit,
Interesting.
going from 6% to now at 5%.
So their operating profit margin, which is often called OPM,
Right.
basically tells us how much profit a company makes for every rupee of sales
Okay.
after they've paid for all their costs.
Right.
Like their
Our employees.
raw materials, their employees,
Great
their
guy.
wages.
Mm-hmm.
So even though their revenue went down, the fact that their OPM improved suggests they're managing their costs better.
Okay.
But it's still negative.
Yeah, that's it.
Which is not a good sign, meaning they're losing money on their core operations.
Okay.
So something to keep in mind as we go forward.
Yeah.
Yeah.
Now, in their filings, both interest expenses and depreciation remained steady this quarter at 17 crore and 36 crore respectively.
Okay.
Could those be playing a role in this negative OPM?
They absolutely could.
Okay.
So depreciation, basically, it's the cost of using up assets over time.
Right.
Like wear and tear on their machinery.
Okay.
So a steady depreciation figure might mean that HIL is investing in its operations, which is good, could mean future growth, but it impacts their profitability today.
All right.
Short term.
Makes sense.
Yeah.
And what about those interest expenses?
So interest rates have been going up in India.
Right.
And this could mean HIL is paying more to service its debt, which would cut into profits.
Yeah, makes sense.
It's like having a credit card with a high interest rate.
Yeah.
Even if you're paying it down.
Right.
Those interest charges can make it feel like you're not making progress. Yeah.
So it's a steady depreciation, maybe a good sign for the future.
Right.
But rising interest expenses.
Yeah, that could be a sign of trouble.
Right.
Yeah.
So should we look at it?
Yeah, we should definitely
look at full year and half year reports.
Yes, they're consolidated financial statements.
Okay.
Those will give us a much better view of their performance over a longer period.
Okay.
So what are you seeing?
Okay, so one thing that I'm seeing that really jumps out at me is this big sale of assets they made back in the fiscal year ending March 31st, 2024.
Okay.
And these were assets that they had classified as held for sale. And they generated a profit of 3,721 lakhs.
Okay.
That's
a lot of money.
It is a lot of money.
Yeah.
So what do you make of that?
Well, companies often sell off assets that aren't considered core to their business.
So like spring cleaning.
It's like spring cleaning, yeah.
For a business.
On a corporate scale.
I like that.
So maybe they needed cash. Or maybe it was a strategic decision to streamline things and focus on the most profitable areas.
Okay, I'm thinking strategic.
Oh, really?
Yeah. Because they also reclassified a bunch of materials worth 3,226 lakhs that were originally meant for trading.
Okay.
And they shifted them to be used in production.
Oh, wow.
Instead.
Interesting.
So maybe they're moving away.
Yeah, maybe they're moving away.
From just trading building materials and focusing more.
Focusing on making their own products.
Okay.
That's a good point.
Right.
Yeah.
And that actually lines up with what we were just talking about with the
depreciation. Yeah, because they need to invest to expand production.
Exactly.
Yeah, that makes sense.
Okay, so speaking of big moves.
Okay.
Let's talk about the elephant in the room.
Hurry.
Their acquisition of Crestia Polytech Private Limited.
Crestia.
And its associated companies.
Okay.
Back in April of 2024.
April 2024.
This seems like a major move.
Yeah, it was a pivotal moment.
Okay.
Sure.
So what's the story here?
So they invested a lot.
Okay.
16,046 lakhs as of September 30th. And they've fully integrated Crestia into their polymer solutions segment.
So they're serious.
They're serious about polymers.
Okay.
Yeah.
Polymers.
Well, polymers are being used more and more in building materials.
Okay.
You know, things like PVC pipes, insulation flooring.
Yeah.
So HIL was already in this market.
Okay.
But this acquisition looks like they're trying to scale up significantly.
Okay. So, but their stock.
Oh, yeah. Their stock performance.
Performance is kind of lackluster.
Yeah. Investors are fickle.
Right.
They might like the long-term potential, but they also want to see results.
Makes sense.
And remember, the Crestia acquisition is still new.
It takes time for these kinds of moves to pay off.
So, so it's watch this space.
Watch this space.
Yeah.
Okay, so we've seen...
we've seen some clues. The drop in revenue, improving OPM, selling off assets, the shift towards manufacturing, and that big acquisition. So it all points to a company that's really changing things up, trying to adapt and seize new opportunities.
Okay.
The coming quarters will be really important to see how this all plays out.
So we'll be here.
We'll be here
to analyze it every step of the way.
Every step of the way.
But let's dive even deeper into this fascinating case.
Sounds good to me.
All right. What do we tackle next?
All right. So we've established that HL Ltd is...
They're undergoing a major transformation.
Yeah, a major transformation.
Yeah.
But what does that actually look like? Yeah, good question.
In terms of their financials?
Well, if you look at their half-year report ending September 30th, 2024, you'll notice they continued selling off those non-core assets.
Right.
So they sold a piece of land and generated a profit of 8,189 lakhs.
Okay.
And if you combine that with the 3,721 lakhs profit from asset sales in the previous year, they've brought in a significant amount of cash.
So they're raising capital.
Yeah, they're raising capital.
Well, how are they using it?
Good question.
It can't all be going towards Crestia?
Well, you're right. It's not just about Crestia. Some of that cash is being used to pay down debt.
Okay.
So their cash flow statement for the year ending March 31st, 2024 shows a substantial repayment of long-term borrowings amounting to 12,453 lakhs.
Okay.
However, they also took on new long-term borrowings totaling 30,170 lakhs.
Okay. So
during that same period.
Sounds like
It's a balancing act, reducing some debt while also taking on new loans.
Right. Could this be a strategic move?
It could be.
To secure better interest rates?
What? Or
more favorable terms on their debt?
It's like refinancing your mortgage to get a lower interest rate.
Okay.
So it reinforces the idea that HIL is restructuring its finances.
Okay.
They're not just focused on growth.
Right.
But they're also optimizing their debt.
Makes sense.
Yeah.
Okay, but let's not forget about Crestia.
Right.
How much have they actually invested in this acquisition so far?
The cash flow statements show that as of September 30th, 2024, HIL had invested 11,052 lakhs in Crestia and its subsidiaries.
So that's a lot of money.
It's a significant amount of capital.
Yeah.
Especially considering they're also investing in other areas. Their cash flow statement also shows an investment of 16,046 lakhs in subsidiaries for the half year ended September 30th, 2024.
So they're spreading their investments.
They're planting seeds for future growth.
But we also have to remember that their stock performance.
Yep. Their stock performance hasn't been great.
Has not been great.
It takes time.
Yeah.
For investors to understand a company's vision.
Especially when it involves
a major change like this one.
Yeah, so patience is a virtue.
Patience is a virtue.
When it comes to investing in HIL.
That's right.
Are there any other...
Yeah, there's one detail about their subsidiary in Germany.
Okay.
HL International GmbH.
All right.
That I found interesting.
Okay.
Their annual report mentions a loan of 4 million euros that HL Ltd provided to this subsidiary back in August 2023.
Okay.
This loan has an interest rate of 8% per year.
Okay.
And it's repayable after 3 years.
So that's a pretty big show of support.
It is.
For their German subsidiary.
Yeah. Shows a lot of confidence.
Are there any other ways that they're backing this subsidiary?
They're not just giving them money.
Okay.
They're also standing behind them with a corporate guarantee.
Okay.
So Hil Ltd issued a guarantee of 33.705 million euros.
Wow.
On September 27th, 2023.
Right.
In favor of Hil International GmbH for a loan that the subsidiary took from ICICI Bank UK PLC in Germany.
Okay.
In return, Hil Ltd receives a commission of 0.5% per year.
Okay, so it seems like
they're really committed to helping the subsidiary succeed.
Right.
Providing a loan and issuing a guarantee are clear signs of confidence in their subsidiary's potential in the European market.
Makes sense.
Yeah.
So speaking of expansion, let's shift our focus to HAL's performance across different segments of their business.
Sounds good.
Where should we start?
Well, their consolidated financial statements for the quarter ended September 30th, 2024. Provide some interesting insights.
Okay, like what?
Their roofing solutions segment brought in the highest revenue, reaching 19,998 lakhs.
Okay.
But surprisingly, their flooring solutions segment wasn't far behind, generating 27,750 lakhs.
Wow. So despite the overall dip in revenue.
Yeah, despite the overall dip.
These two segments seem to be holding their own.
Yeah, they're doing pretty well.
But what about profitability?
Yeah, are they actually making money?
Yeah.
When we look at profit before tax, roofing solutions again comes out on top with 4,866 lakhs for the quarter.
So they're not just bringing in revenue.
Right, they're making a profit.
What about their other segments?
Building solutions contributed 1,137 lakhs to the profit before tax. However, flooring solutions actually experienced a loss.
A loss?
Yeah.
That's surprising.
It is a bit surprising.
Especially given their high revenue.
Yeah, what could be causing that?
Right. What could be causing that?
There could be several factors.
Like what?
Maybe higher input costs. Increased competition. Or maybe challenges specific to that segment.
Okay, so it's like we got to...
It's like a puzzle.
Yeah, we got to look at each piece.
Yeah, examine each piece.
To understand the full picture.
Yeah.
Okay, so what other insights?
Their consolidated statements for the half year ended September 30th, 2024. Reveal some interesting trends.
Such as?
Roofing Solutions continued its strong performance, contributing the largest share of profit at 7,016 lakhs. Building Solutions also remained profitable with a profit before tax of 2,874 lakhs. However, Flooring Solutions continued to struggle, recording a loss of 5,503 lakhs.
So Flooring Solutions is...
Yeah, it's an outlier, generating a lot of revenue, but also experiencing losses.
Could this be related to Crestia?
It's possible. Remember, Crestia mainly operates in the polymer business, and HIL finalized this acquisition on April 5th, 2024. It was a significant investment, and they've integrated Crestia's operations into their polymer solutions segment.
And they're aiming to expand.
That's right. They want to grow
in that market.
In the polymer market.
So how is that segment actually performing?
Their statements for the quarter ended September 30th, 2024. Show that Polymer Solutions generated 16,501 lakhs in revenue.
That's a good start.
It's a promising start.
Yeah. Could this be a sign?
It could be.
That their polymer business is...
It's gaining traction.
Yeah.
It's too early to say for sure. But it's a possibility.
And potentially?
Potentially offsetting those losses.
Yeah.
In the Flooring Solutions segment.
And
remember, their filings mentioned that the Crestia acquisition could open up new geographic markets, so they might see even more growth.
Yeah, it's like they're building a bridge.
They're building a bridge.
To new markets.
To new markets.
With this polymer venture.
Yeah.
But even the strongest bridges need a solid foundation.
That's true.
So what can you tell us?
About their overall financial health.
Yeah. About HEL's overall financial health.
Let's look at their balance sheet.
Okay, let's do that.
As of September 30th, 2024, their statements show total assets of 293,392 lakhs. That's a lot.
What are their major assets?
Their largest asset category is property, plant, and equipment. Valued at 67,842 lakhs as of September 30th, 2024.
So that makes sense, considering they manufacture...
And those factories and machinery.
Yeah, they need all that. Okay, but every balance sheet has two sides.
Two sides.
What about their liabilities?
Their total liabilities stand at 274,316 lakhs.
Okay.
A big chunk of that is borrowings.
Okay.
Which amount to 59,485 lakhs.
Okay. So they have a lot of debt.
They do have a lot of debt.
Is this a cause for concern?
It's important to look at this debt in relation to their assets and their overall financial health.
Right.
And remember, they've been actively managing their debt.
Right. Through repayments and refinancing?
Through repayments and refinancing. So it seems like
they're trying to optimize their debt and make sure it's sustainable.
Okay, so are they striking that balance?
Yeah, we're striking that balance effectively.
What's your assessment?
Based on what we've seen, it looks like HIL is reshaping its business.
Okay.
With a multi-pronged approach.
Okay.
They're selling assets, investing in acquisitions like Crestia, and managing their debt.
To ensure sustainability.
So it's
a dynamic and evolving situation.
But what does this all mean?
Yeah, what does this mean for the listener?
Yeah, for our listener.
What are the key takeaways? HIL is a company in motion.
Okay.
They're not content with the status quo.
Right.
They're making bold moves to adapt to the market and capitalize on new opportunities.
It's been quite a journey.
It has been a journey.
Analyzing these financial statements.
Yeah, uncovering hidden trends.
And piecing together
it all together.
This puzzle of their evolving business strategy.
We've only just scratched the surface.
But now it's up to you.
Yeah, it's up to the listener.
Dear listener.
To continue the investigation. We've given you the tools.
The insights.
The knowledge. The context.
Now it's your turn.
It's your turn.
To draw your own conclusions.
What other aspects of HIL's business would you want to explore?
What other information would you need to understand?
Yeah, to really understand.
Or strategic direction.
Excellent questions to think about.
As you continue your own deep dive. Into the world of Hil Ltd.
Yeah.
Okay, so we've covered a lot in our deep dive into Hil Ltd.
From acquisitions to divestitures to segment performance.
But like any good investigation, there are always more layers to uncover.
Always more layers. What should we focus on? So one area I think we should look at is the impact of Hil's moves on their long-term growth.
Okay, so their future.
Yeah, their future.
So are these bets going to pay off?
Yeah, will these bets pay off?
Or are they going to run into problems?
Exactly. Are they going to face challenges?
That's the big question.
It is the big question.
Right. We've seen good signs.
Yeah, we have.
Like the polymer business is growing.
Yeah, the revenue is up.
But we've also seen those losses.
Yeah, those losses in flooring solutions.
So it's a mixed bag.
It's a mixed bag.
And it's hard to say for sure.
Yeah, it's hard to predict
what the future holds.
The future is uncertain.
It really is.
Yeah.
It's like
watching a tightrope walker.
Ooh. I like that.
You're on the edge of your seat, wondering if they're going to make it.
That's a great analogy.
It captures the feeling of anticipation and uncertainty.
But we've got some clues
to
help us figure this out.
We've got their financial statements.
Right, and those give us insights into
their strategy.
Right.
Their risk tolerance and their financial health.
And one thing that stands out to me.
What's that?
Is that HIL is not afraid
to
take risks.
They're not afraid to make bold moves.
Like acquiring Crestia.
Yeah, like acquiring Crestia.
And investing a lot in polymers.
Exactly.
Even if it means losing money in the short term.
Yeah. They're willing to face those short-term losses.
Or face skepticism from the market.
Yeah. They're not just playing it safe.
Right. They're not just...
They're trying to reshape their business.
Exactly.
And position themselves for the future.
And I think that's something to admire.
It is admirable.
In a world where a lot of companies are.
A lot of companies are just happy with incremental growth.
Or the status quo.
Yeah, or just maintaining things as they are.
So HIL is daring to be different.
They are.
They're embracing change.
They are.
They're trying to create
a new future.
Exactly.
For yourself.
And that entrepreneurial spirit.
Yeah, it's important.
I think that's really important for our listeners.
To understand.
Yeah, to really understand.
Their long-term potential.
Right.
It's not just about the numbers.
Right.
It's about the vision, the drive, the willingness to take risks.
So as we wrap up.
Okay, as we wrap up.
This deep dive.
What's
the final message?
Yeah, what do we want to leave the listener with?
What do they keep in mind?
I think the key takeaway is that Hil Ltd.
Yeah.
is a company to watch.
Okay.
They're not a guaranteed success.
Right.
But they're a company with a story.
They have a story.
Yeah, a story of transformation, innovation, and ambition.
It's been a really interesting journey.
It has.
Analyzing these financials.
Well, trying to uncover
trying to understand
their decisions.
Yeah, their motivations.
Yeah.
And now
it's up to the listener to decide
what they think.
Yeah, what they make of it all.
We've given them the tool.
The insights, the context.
Right now it's their turn.
It's their turn.
To form their own conclusion.
Will Polymer Solutions be the new growth engine?
Will they overcome?
Yeah, become.
Yeah. Will Polymer Solutions be the new growth engine?
Will they overcome the problems in flooring solutions?
We'll have to wait and see.
Only time will tell.
But that's what makes it so exciting.
I know. I'm excited to see.
To see what happens.
What happens next. To watch the story unfold.
So to our listener, we say,
keep an eye on Hil Ltd.
Their journey isn't over.
Not even close.
And it's going to be a really interesting one.
Happy observing.